Hello everyone, welcome back. In today's video, I'm going to go over the intrinsic value calculator that I developed using the Gordon growth model and the Benjamin Graham's formula. You may ask, what is the intrinsic value? Well, intrinsic value is when you calculate a value of a ticker or a stock. In this case, like if you're looking for like a dividend stock that's valued, that's overvalued or undervalued, then you use this calculator to calculate that. So you may be asking, who is Benjamin Graham? Well, he's an investor who wrote a book in 2006 on investing. And he developed this intrinsic value formula to help compute and figure out if the value of a stock is good, it's a good buy or a bad buy. So with that being said, let's get started here. So let's look at a ABVV. Okay? I already input all the dividend payout for the year. So why, you might ask, why do we need that? Because it's going to get the average of the yearly dividends so that you can compute it using a formula. And some of the cells have notes to help you input data, tell you where what data goes where. So going back to the yearly dividend, as you can see here, I put in all the year dividend, and you can find this information on like Yahoo Finance or any finance website. And once you put in that dividend, it will generate, will compute and generate the average. As you can see, the average, and then once you put the average, once it's compute the average. So here in this box is your return on investment. What percentage you want? 10%, 9%, or you can do the WACC, the weight average cost of capital, which is running about 7%. But with this formula, you would like the weight average cost to be higher than the average growth rate, because it will mess up the formula. So let's go back to, we're going to put 9% here. As you can see, we're expecting a growth rate of 9%. So the intrinsic value of this ABBV is $151, and the current total price, again, you can get this information from Yahoo, is $165.18. So there's a difference of about 8-9%. And down here you can put your margin safely. You put your, I have a 50%. So margin safely is like, what is your acceptable buy price? So as of right now, it's a buy, because as you can see, the acceptable buy price is $75 and the intrinsic value is $151. So it's below that, so it's a buy. And this buy and sell here, it actually is color coded, so it's conditional format color coded. So when it's a buy or sell, it will change, and also the wording will change. So now let's jump over to the intrinsic value calculator, the stock discount valuation. This is a little bit simpler. Well, we're going to look at the AAPL. So the EPS earning of AAPL is $5.87, and you get that, again, you can get that information off of Yahoo Finance. And here you can set if you want more conservative or more high regular standard Benjamin Graham formula. So I have it there where, let's say we're going to run it conservative a little bit here. The growth rate, and you get that growth again at Yahoo Finance or any financial website, is 8.34%, and 1%, and I have a 1G again to be conservative, and your average yield is usually just 4.4%, and your current yield is 2.6%. You get that information off the Fed economic data, and that changes, of course, every month. And then your intrinsic value, after you put all that information, your intrinsic value, you can see is $70.30 for Apple, and the current price is $165. So the margin stays at 50. So Apple's a buy. Here it's telling you Apple is a buy. It's a good tool to add to your investment tools. And there is a link below if you're interested in taking a look at it and review it a little bit more. And other than that, until next time, take care.